This is the Friday, October 17th, 2014 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
We did not have a chance to discuss cotton during the show. Had a bit of a down week. Talk to us a little bit about what you're seeing in that market.
Cotton market has really been struggling. This is a time of year, and when I go back to my 5-year seasonal studies, that cotton tends to move higher. And it seems kind of counterintuitive because we're right in the middle of harvest and all these things. But like so many other grains, we've developed this pattern where we set an early harvest low and then rally out of that. Basically, cotton's supposed to move higher through the end of the year, and it just cannot build any momentum. We're trudging sideways at best, sometimes posting new lows. It just can't find that consistent buying, say from the folks in the cash market itself or from investment traders. Neither side can really stay interested in cotton long enough to get it moving. We'll see a few days up and then it falls right back. So I think we're going to stay in that pattern now. I just don't see the reason, I don't see the factors out there that's going to get traders interested long term.
The way things look today, do you anticipate cotton losing still more acres to beans?
I would think so.
As we look to next year?
I would think so. I think next year we're going to see beans gaining a lot of acres. Again, most likely taking some from corn. Could take a few more from cotton. I think wheat's going to kind of be a wild card next year. We've seen it we've seen it lose some acres here over the past few years. Wheat may stabilize actually in its acres because of all of the volatility that we've seen in these different markets and so many still long-term bearish outlooks because of all the super crops that we're seeing, these record crops in corn and beans. That could lead to a few more acres of wheat next year. But I just think cotton's going to struggle to get to gain some back.
All right. Now, as apparently most of our viewers have also been watching the equity markets here over the past couple of weeks, and we've got several questions. Phil in Ontario and Jeff is curious, what does this volatility mean for the grain markets? Are we seeing an end to this 5-year bull market? Will folks come back into the commodity side, do you think?
Will they come back to, take the second part of your question first, will they come back to commodities? Not in mass like they did before. I don't think it's going to happen. I think these markets evolve. The intelligence behind, quote unquote, the intelligence behind these markets evolves. I think what they're going to look for now are commodities where we have bullish supply and demand situations or the potential for bullish supply and demand situations to start to park some money. They saw it in cattle. They've loved cattle. They've helped push the cattle market to these astronomical prices. Just because we're seeing this huge sell-off in the Dow, I don't know that it automatically means that we're going to see the money coming back into commodities at large. A lot has to do with the U.S. dollar index as well. It's been strong. It's backed off the last couple of weeks. We'll see if we're actually establishing a bit of a downtrend there. I think that may actually come into more into play in bringing money back to commodities than the sell-off in the Dow.
Okay. All right. So the sell-off is, for now, it's separate. It's a separate event?
It's a separate event that really kind of paints an overall tone. Basically what we've got going on right now is a large landscape of fear and uncertainty, and no market likes fear and uncertainty. Doesn't matter if it's equities, doesn't matter if it's energies, grains, metals, whatever. Fear and uncertainty tend to drive people away from markets. Go to something safer, and it certainly seems to be the case right now. Yes, we've seen the grains move up a little bit. I think some of it is liquidation of positions that have been on in the past. We'll see if we can start to get some fresh buying and maybe starting to see some early signs of at least some of that money coming back over into grains.
All right. Now we've got a question here from Brian from Twitter, and he's got a question that I'm sure a lot of producers have as they headed into this potentially record year. Decisions were made for storage, and a lot of folks said, well, we'll just sell the beans, store the corn. And Brian's question is, does this rally offer the best chance to sell beans, or is it possibly worth storing some beans at the expense of some corn?
It's still a tough call. We've seen a nice 2-week rally in both markets. What we've seen in beans, though, is that they're having a little bit more trouble closing weeks near their highs than corn is. So, as we talked about on the show, if a producer is wanting to make some sales in beans, they can do that because basis is a concern. Once we actually get into this harvest and we start to see some supplies coming in, we could see basis start to soften a little bit, not to the degree that corn is, but we could see some weakness. So if you want to avoid that, use these rallies that we see to make some sales. Long term, yes, the picture still looks a bit bearish in soybeans. It's very hard to make a bullish argument, but we don't know what this delayed harvest is going to do, if it's going to take some of that yield off the top. Maybe we've seen a worst case scenario built into this market. So as we talked about on the show with corn, where we might be looking at a long-term change in trend, we're not that far down the road from possibly the same thing happening in soybeans.
Okay. Now, you've got a number of different charts that you look at to help determine the market. Now, one of the charts that you've been maintaining for quite a while is a correlation chart between the Kansas City Royals and the corn market.
Absolutely.
Where are we this year?
What's interesting this year is, if I go back the last few years and I look at the cash corn, DTN National Corn Index, National Average Cash Price, and what the Royals have done, there's a negative 80% correlation. Now, correlation does not prove causation. That's an old fact. Statistically, that's what they always teach you to say. But what it says is the stronger the better the Royals are doing, the weaker the corn market should do. Now, Royals are in the World Series right now. If they win this, does this mean we're going to new lows in the corn market? Scary thought, I know. But here recently, the last couple of weeks, they've been moving together. So maybe we're starting to see that pattern change ever so slightly here at the end of the season.
Now, you mentioned the cash corn price. We do have a question from Andy in River Falls, Wisconsin. He's just curious, what are we still seeing in the Dakotas? From a basis level, for producers who aren't connected with that area, fill us in on where the cash corn price is up in that neck of the woods.
It's still a very weak basis. DTN has these has our basis maps, our cash price maps on the system itself, and you can look day in and day out, every week, whatever, every month, and you see this dark red blotch up in the northern plains covering the Dakotas, and that just shows that's where the weakest basis is. That's where the lowest cash prices is. With the transportation still remains a mess up there. We're still moving crude oil more so than grains, and I don't see that changing anytime soon. Now, again, harvest has been delayed. Maybe that helps, again, stabilize basis a little bit, but I don't think basis is going to improve in that area anytime soon.
All right. Well, Darin, we'll let you go. You've got a busy week ahead. The Royals playing.
That's right.
So thanks for taking the time to join us this week.
Well, as always, thanks for having me on, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you.